starting off with the FTSE 100, which is doing what we wanted it to do after a bit of a delay, bouncing off the 50 and 200-day lines on a consistent basis. We had that since the beginning of the year. And then breaking again for the second time the December resistance line 82.30 and pushing towards the main post-spring 2024 resistance at the 8400 level. Best case at the moment is that we head up to the top of that rising trend channel, which has been in place since September 2023. That's heading for 87.20, which I suppose with a fair wind behind us, we might get by the end of next month. RSI rebound off neutral 50 again. I suppose you could argue that's the second one this month. The other point to note is the way that both the 50 and 200-day lines are rising. That means we're imminently going into a golden cross, and the run-up to a golden cross tends to be the strongest part in the cycle. If we do break down below 8200, then there's a chance of testing the floor of that rising channel from basically currently around 81.10. Moving on to the DAX, and here we've got that rising trend channel from the autumn of 2023, top of the channel there, 21,000. We're looking for that hopefully by the end of this month, especially while we remain above the initial January resistance there at 20,600, currently where we are at the moment. Worst case is a rug pull towards the 50-day line at 19,800 at the moment, but it looks as though there's enough gas in the tank here for a move towards 21,000, even if we pull back after that. Moving on to the Dow, and here you can see the bounce off the rising trend channel there from back in April last year. That was a bear trap rebound from below 42,000 and gap higher. Nice sign there of the rising 50-day line as well, 43,400, the level there, that 50-day line. And we're hoping now, I suppose, for a move up to the top of that rising trend channel as high as 46,400. Maybe by the end of next month, while we remain above the 42,000 level. We already noted bullish divergence in the RSI window with the lower low for January, but higher RSI trace. So technicals coming up with the goods there. You can argue a bit about the angle of that channel there from March last year, but the top of the channel there heading for 46,000 plus, and we're looking for that while we're above 42,000. Moving along to Bitcoin, and here you can see it's well perched next to the 100,000 level and also that December resistance line, looking for a definitive close above 100,000, which I suppose we got yesterday, but we weren't able to push through on that, and hoping that we'll get a retest of 108,000, the record peak, by the end of this month. On the downside, support there at the 50-day line, 97,400, and obviously the main neckline support there now at 92,600. RSI in the right place at 55. That normally is a forerunner of a potential move to the upside. Gold is next, and it almost seems to be an echo of what we're seeing at the on the Bitcoin chart. We've got that resistance line there from back in the autumn, around 27.25. Looking for an end-of-day close through that to give us a move up to at least testing the record highs towards 2,800, and then best case by the end of next month, or maybe a little bit longer than that, would be up to 29.50 at the top of that rising trend channel from back in February last year. RSI rebound off neutral 50, which is, I suppose, the second one we've had this month, so that does put us in a good place for looking to the upside, and support coming in above the 50-day line there at 26.60. That's hopefully the lowest we'll see this market go ahead of a potential move to the upside. Moving along to the pound, and here a bit of it looks like a bit of a bear flag here with the resistance coming in at 123.10. That was a failure below the initial support there for January at 123.40, and so while we're below that combination of support and resistance, looking for this market to continue to roll over to the downside. Falling trend channel there from back in October 2020, and that's heading for $1.18. And that's what we're really looking for the longer we stay below the 123 zone. Moving on to the stocks, and an intriguing chart here from Active Energy in the sense that we had the spike higher towards 0.3 pence, but we've come back now to find support multiple times there at 0.17, which is basically near the top of the gap down that we had back in June. W-shaped turnaround here, end of day close above the midpoint of that W. 0.22 should take us up to 0.3. In fact, we're looking for a bit more, up to 0.35, which is a resistance line there and the top of the gap from back in March last year. So basically, looking for the shares to double while they hold above 0.17. If you look closely, you can also see there's been an RSI rebound at neutral 50, which tends to be a leading indicator on the upside. Moving along to a stock which is a favorite in the biotech area in terms of the interest that this stock has. What the positive here, apart from the RNS that we had today, which obviously was a positive one, double bounce for the RSI at neutral 50. We had a successful signal there basically at the end of last month from 48 to 60. And we're looking for the same magic to happen here while we're above the 50-day line at 48. Got a resistance line there from July at 59 pence, and maybe that's what we could see. If you're cautious, you wait for an end-of-day close above the rising 50-day line there at 55 pence before assuming we've got a proper turnaround on tap here. Next up is Celadon, which hopefully gave one or two shorters and naysayers a pie in the face today with the shares up 120% at one point, or actually more than that. Here we've had one of our favorite setups, which is a bear trap island reversal, so gapping down to new lows and then gapping up again as we did today. The view now is that the longer we stay above resistance on the way down at 30 pence, the greater the chance of a move, not only up to the 200-day line at 52 pence, but maybe even as high as 70 pence on the basis that this stock may have caught a few people out over the near term. Next up is a stock which doesn't get much airtime here or anywhere else, but Catenai looks as though it's in a bit of a recovery mode here. We had the turnaround and the gap fill, the September gap fill around 0.21. Above that, looking for the top of that broadening triangle there at 0.43, hopefully by the end of this month. And you can see the blue or clear candles that we've had over the couple of sessions. It looks as though a bit of a turnaround there, especially with the 50-day line rising quite sharply at the moment. This stage only back below that 200-day line, 0.22, really delaying the upside scenario. Moving on to another winner today, which came off the back of decent news, Cambridge Nutritional. And here you can see that the shares gapping up through the 50-day line. So it's a bear trap gap reversal from below 3.16 pence. And above that, we're looking for the top of the rising trend channel from basically the autumn of 2023, 5 pence, hopefully by the end of this month. But ideally, we have an end-of-day close or closes above the 3.5 pence level to give us that target. You can tell it's a bull market or the start of a bull market potentially with or when Duke Mount is rising, and here it is rising for the first time in a long time. You can see that we've got a potential rising trend channel base, top of the channel there at 0.06, and we're looking for that. We can get a decent end-of-day close above the 200-day line there at 0.03. Obviously, we've pulled back a lot. There'll be a lot of sellers there or people who've been weak hands there trying to get out in panic. But best case here is that while we're above that 0.03, we could get up to 0.06 pence on that. The Trump trade of the autumn was certainly for Expo. It was supposed to be also Eurasia, but that's taken a bit of time. And here you can see that what this rising trend channel base, top of the channel there at 3.1 pence. That's our target, maybe by the end of this month, while we remain above recent resistance at 2.25 pence. So maybe a reasonable risk-reward situation for people who are interested in that. Moving along to another stock which has been quiet of late, but it's coming back, and that is Fragrant. And here you can see that we had a massive spike here all over the place, actually. Obviously caught a few people out. Looking through the detail of the price action, you can see that we need basically to hold above the 50-day line there at 0.42. If we can do that, then this may not be a full storm, and we have a bit more upside on that. But obviously, very volatile and quite crazy situation there. Moving on to Fiinu, which has done what its supporters would have wanted it to do, which is deliver good news on its overdraft app. And here you can see that we've broken quite a few targets there. The current situation, though, is everything's around the 6 pence zone. That was an important area on the way down. You can see there was resistance there back in the summer of 2023, above 6 pence. So if we can hold that, the next level up would be up to 10 pence, which was support on the way down for the shares at the beginning of 2023. Moving along to IQAI, and here another possible recovery situation. Here you can see that we've got a rising trend channel base. We made good progress here with the break of the November-December resistance at 1.6 pence. Above that, looking for the shares to head up as high as 2.4 pence, maybe as soon as the end of this month. But the 50-day line rising now, the V-shaped bull flag, as I call it, also giving a nice look to the situation at the moment. I haven't looked at Mobile Tornado for a while, and here you can see that there's been some decent progress with a rising trend channel base and breaking through the 50 and 200-day lines there at 1.5 pence. Above that, looking for as high as 2.5 pence by the end of next month, maybe sooner than that, given the way that the shares, when they move, they can move quite well. On to Miriad, and here the picture is one of another potential rising trend channel base. The battle here at the moment is the 50-day line there at 0.18. Above that, we're looking for this stock to at least fill the gap from November up to 0.27 pence. And ideally, we stay above the floor of the gap there at 0.15. Big placing news and a decent funding for Oxford Biodynamics. I believe it was 7 million and at 0.5 pence. And what's positive here is that the shares are holding or have bounced at the 0.5 pence level. And above that, at least looking for the shares to head back towards the old December support area around 0.9 pence, even if they fail again after that. We've got an uptrend line in the RSI window, which is also giving us some comfort that the worst of the downside here is finally over. On to the last two. The first one is Pristine, which I've been meaning to cover for quite some time. Here you can see that we've got a broadening triangle, broke out of that falling wedge at 0.44, broken above a now rising 200-day moving average. So both the 50 and 200-day lines are rising. So that means we're heading into a golden cross and looking for 0.8 pence by the end of this month, or even sooner than that, given the lay of the land. Finishing off with one of the best performers of late, which has been covered here from the start, or near the start, which is Sealand Capital, a company which I think didn't know why its shares were going up. But at the moment, got this rising trend channel from the end of November. Top of the channel there, I suppose one could say, heading for 12 or 13 pence, maybe take a bit of an effort to get up there. But at least while we're above the floor of the channel there, 7.5 pence, looking for 12 pence plus as a best case scenario target. That's it for me today. More updates tomorrow.